In this video, we'll talk about how to identify high probability setups using price action rules in trading ranges. Because the structure of the market is clearly a trading range, there is no clear universal bias, traders are undecided, and I see a lot of price swings swinging up and down. So even though the structure is trading range, that doesn't mean I'm not going to be following the trend line rule. Because just because there is no big main trend, that doesn't mean there are no micro trends inside of the trading range. If I want to stay on the right side of the market and I don't want to take bad trade, I want to follow the trend line rule even during a ranging market. And second, what I have to do is I want to make sure I'm going to mark my important key levels that are going to be constraining this trading range. The low of the day and the higher important key levels, because a lot of times these key levels are acting as targets for prices, and these key levels will offer you an important key level where the setups may appear, because you will find a reaction throughout the day if the trading range is going to get confirmed. So right now prices keep working lower, so I'm going to redraw the short and downtrend. I'm going to copy it, put it at the bottom, but at the same time I'm going to redraw the correction because there are also micro trends inside of this main one. You have a new low, you have a first attempt to sell, pull back, we have a second attempt to sell. So we have a second entry short at the key entry point, and also we have triple top, triple test forming. So we have two key entry points. And why are we thinking about selling? Well, because this downtrend needs to get new extreme according to trendline rule. So by following the trendline rule, we are able to dissect the direction of the market in a short period of time. So we have a second entry short, but the signal bar is bullish. And because I'm selling, I want to sell below bearish bar because I want to have the confirmation of the momentum. So even though the context is good, unfortunately, I cannot sell, and market created new extreme and formed second entry long of the highs. New high, first entry long, second entry long. So this setup can be considered by aggressive trader to take a quick scalp to the EMA because we are far away from EMA and we are forming double bottom. But the support is just getting confirmed here. It's way too aggressive. So don't really want to mark it just yet. But you can see the price is formed two-legged pullback here. We even have two-legged pullback to the upside. And we can also divide the price action in another two-legged pullback. So this is why it is so important for price action traders to train their eyes to see these two-legged pullback patterns, because this is how market likes to move a lot. Not every single pattern is going to be moving in a two-legged pullback formation. A lot of times, once you get the experience of watching a pure price action, you'll figure out that these two-legged pullbacks are very common. And if you combine this two-legged pullback with the proper key entry point and the right context, it's going to result into a high probability setup. So I'm going to delete this so it won't get too cluttered. Price action is confirming the support and we're bouncing higher. So I'm going to redraw the short-term option again. You have a small break new extreme again. Okay, prices are trending lower. I'm going to redraw the short-term downtrend. At this point, what am I expecting? You know, there's no clear bias, so I'm not really expecting to take any setup. I want to see more confirmation from the market. I'm going to redraw the uptrend, and you can see the price action is just going sideways. There's pretty much nothing for me to take because it's getting wedgy. EMA completely flat, no clear bias. So this is a no trade zone. And just because you're traded doesn't mean you have to be looking for trade on every single candle. There are going to be areas like this on a chart where there's just simply no high probability setup, because high probability setup needs to fit all the criteria. I can see that there is some resistance at the top, and I can also draw a channel a little bit wider because it's getting respected. So I can't really go long, I can't really sell. The resistance is getting confirmed. We're pushing below EMA. And now we have new high, first entry long. Okay, so now we're pushing below EMA. Now you may start thinking about possible failed second entry long, because the triple top is getting confirmed. You're back below EMA, but the failed second entry long never formed. And prices are on the way down to test the important key level. Now, I can redraw downtrend wider like this, let's say, but I know that since this trend range is too tight, I can't really draw a channel this would be too wide. That's not really how price action behaves. So for this reason, I'm going to use my channel a little bit tighter, something like this. Nevertheless, this downtrend still needs to get new extreme. We have micro double bottom, I cannot sell, and we already formed new low. And this is important. Notice what is happening now. The main support, the low of the day, is getting confirmed. Wide triple bottom, and a lot of smart traders will start buying here. Because in trading ranges, you want to buy low and sell high. And you can see that this would have been a decent setup had the signal bar been more bullish. Had this signal bar been much stronger, You could have actually considered buying here, but because the signal bar is pure doji indecision, we can't really pull the trigger, unfortunately. I'm going to redraw the uptrend. We have a second entry short, but can I take second entry short? I cannot, because this uptrend has a chance of getting new high. I would need a failed second entry long. By the time I get a failed second entry long, there is no trigger higher, so there's no second entry to fail. It's forming above EMA after big bull bar, and this is an inside bar, so I can't take it. So once again, area on the chart, pretty much no trade zone. EMA is getting completely flat in all these bars. I'm just going to be completely patient. When I see congestion like this, I also need to mark it, because congestion like this is nothing more, nothing less than just a small version of a trailing range. Okay, and every trailing range is marked by these important key levels. And this is so tiny congestion and so tight that it's not even worth it to be buying low, selling high, because you don't have enough room to scalp out. This is EMA in all these bars. It is tempting to both buy and sell at the same time. And once it is tempting like this, that means you're probably not reading it correctly. You need to put your hands off the keyboard and just let price action do its thing. Wait for prices to break in either direction and try to fade the breakout. That's how you trade these congestions. Okay, so this is a no trade zone. Don't even try analyzing the structure here. You will overanalyze it. Just take a step back and wait for market to break out of this congestion somehow. Okay, you can see that the downtrend broke lower. We're finding support at the low today again. And notice what we have. New low, first entry short, pullback, second entry short, and a failure. Confirming the support for the fourth time. And this is looking like a repeat pattern a little bit of what's happening here. Push down, push down, push down, rejection. Push down, push down, push down, rejection. So this right here is actually a decent failed second entry short, our first high probability setup for the day, because the support at this point is so confirmed. And it is looking like a repeat pattern of this. And in price action, if something looks like a repeat pattern, it's most likely gonna repeat again. And the downtrend also paired with the breaking low. And more importantly, this is a small consolidation, small trailing range, and you broke lower. So if you're fading the breakout, you're expecting for this breakout to fail, and you're not only fading the breakout here, what you're also doing, you're buying the low of the main trailing range. So you're kind of combining the main trailing range rule with this failed breakout rule of this tiny trailing range. So this is decent setup to take a chance. Market is breaking higher, and notice what is happening. If you're unsure about the bullish activity at the bottom of the trailing range, prices are right now pushing above the EMA, confirming the bullish momentum for you, and you have high-low confirmation setup of this failed second entry short. So another decent high probability setup, high-low above the EMA, confirmation setup, and prices keep working higher. By the time you get a failed second entry short, you cannot really take it because it is far away from the EMA with the body, and it's quite close to these highs. So you want to buy low, not too far from the EMA with the body like this. And market keeps going sideways. Okay, EMA is flattening. Once again, no trade zone. And notice what's happening. Repeat pattern of this. EMA is flattening exactly in all these bars. So what does that mean? That means they have to identify the extremes for this congestion. And once again, this is looking like a bad area on the chart. No trade zone. Already similar to this. So your best bet is just wait this out. Don't take anything. We actually have an interesting second entry long, new high, first entry long, pullback, second entry long. And you would be buying the bottom of this trailing range. The only negative is the signal bar is doji. And what if you're going to push lower here, just like you did here? So not a bad setup at all. Actually quite decent because you have brought two legs down and you have a lot of room to get up before these highs, so that's good. So if you're more aggressive and more advanced, you can take it. It just feels a little bit too stacked, part of this congestion. But you can see how the small trailing range acts. Okay, and notice what is happening. High low, high low, high low, and prices right now keep trending high. Okay, so at this point, it's starting to look like the bulls are taking over the trailing range because every single low is higher and higher, and prices are correcting to the EMA. So what I can do right now, since this is looking like the bullish reversal is happening, I can look for channels. I can draw a wider channel like this, confirming the lows, but this channel is just very flat for the structure we are right now in. This is still quite a tight trailing range, so this feels too broad. But what I can do, I can try to select these two swings and see if the trend line is going to get confirmed. Either way, I'm just trying to find some decent pattern. Let's see what the downtrend is going to do, because this is important. how the downtrend is going to play out, if there's going to be a tight or wide one, or how the EMA is going to hold. This is what you do in a situation like this. You go here, break, new extreme, and we have strong rejection of the EMA. So this is a good sign for bulls. The downtrend played out with the break new low, and the EMA keeps holding. So this is another second entry long, but the signal bar is this ugly bearish bar. So if you wait for this bullish bar to finish and you want to take double bar entry, remember, your stop loss has to go below the signal bar, below the low of this entire correction. So you enter here and the stop loss goes all the way down here. Not that it is that significant because the volume is so low today that this actually it looks big, but it's not really that big. But you know, it's really ugly. You know, if it wasn't for such a massive, horrible bar here, this would have been a great setup. But definitely feels more aggressive. Let's see if we can get high low. And we can't get high low. It's too far from the EMA, too far up. We get a failed second entry short, but it's not fully at the EMA just yet. We can pull back, so we can't take that either. And now we have a second entry long. Now, at this point, this second entry long is good, but you need to be fast enough to adjust the trend line a little bit like this. To cut the corner here a little bit. See, okay, we got it come from here. And now we're getting confirmation again. If you're watching this real time, you can see that you have two key entry points, not one, but two. The EMA is congruent with the trend line. You have confluence of key entry points. This is a new high, first entry long, pull back, second entry long. So if you're playing this like this, you can consider taking more aggressive second entry long, because the fact that EMA keeps holding again every single time is confirming there is some bullish channel, and the fact that the market is reversing. Okay, we keep trending higher. Okay, we're bouncing off the top of the trend range. Remember, we still want to follow the trend line rule. Just because we're bouncing off the top of the trend range, take a look what happened. From the very bottom, we're for the most part above EMA every single time. Maybe stay below here, but that's because the price action is about to rally up higher. But after this point, basically where the uptrend truly started, consistent EMA rejections. So at this point, the bias is still bullish, and I'm still expecting second entry long. Okay, horrible signal bar, didn't even trigger, and prices finally form new low. Okay, so remember, you're not really selling just yet. Yes, you're bouncing off the highs, but remember, this uptrend can get a new high, and most likely will. In trend ranges, sometimes the channels may not get new extreme. That is not that super uncommon, but you want to see proven downtrend first before you're gonna start thinking about selling. You're watching this right now with bullish lens, and you're looking for push above EMA to get high low or fatal second entry short. Because you have first leg down, second leg down, downtrend played with the break new low. So what are you expecting? Push above EMA and high low, or failed second entry short to get a new high according to trend line rule. And none of that is forming. Just a strong push to new extremes. So unfortunately, no way for us to get in, and market formed new high. Okay, you can't really suggest it because this was a strong bullish momentum basically from the very bottom all the way to the top. You can see how consistent this uptrend is. Remember, you want to see when the trend is this strong, proven downtrend. You have a two-legged pullback here, but the uptrend played out with the break in new high, and we just have a failed breakout above the important high of the key level. So feels way more aggressive. It looks good on a local price action scale, but you just broke above the trend range, and this uptrend has a new high. You know, it feels too aggressive. High low looks bad, and price action is suddenly, notice what is happening, rallying higher, and this is extremely bullish. So when I was watching this, I was widening my channel like this, and we have overshoot, so I expect stronger bearish pullback, but notice it's getting completely negated, like it's not even there. So clearly this channel is not valid, because this is not what overshoot looks like. Overshoot should pull back fairly quickly. Once it keeps running high like this, this means, okay, this channel is not correct. Sometimes it can happen that the trend may start a little bit later like this. I don't know what caused it. There were no significant news, but we don't care. We just follow the price action. So only thing I can do, I can't really draw any better channel that would help me to put under control this price action. But I can use channel like this. This looks fairly good because I already have 3 swing confirmation here. I'm just going to copy it, put it at the top. Actually, I played it like this. And I still play it like an overshoot, because this is such a parabolic move up without a pullback. This has to feel like an overshoot. So I want to be careful. I'm going to redraw the short and downtrend. So remember, you have a second entry long, But after overshoot, you cannot take second entry long just yet. Okay, I don't know at this point that the trend line is wider. It can be wider like this, but when I'm trading this live, I just don't know that yet. And in order for me to confirm this analysis, because remember, the trend started basically from this point and it was a massive bullish rally. So there's a chance that the trend may be wider and a brand new uptrend is starting. Okay, because our initial wider trend was so out of place, the overshoot was basically not the right move, that there's a big chance that there's going to be a brand new stronger uptrend starting a little bit higher. But because I don't know this, I want to see high-low confirmation setup. And notice, now we have high-low confirmation setup of the second entry long, which is a good sign that right now you can trust going long because you waited long enough. It's confirming the second entry long. This is a great tier 1 signal bar right at the EMA, and even after overshoot, confirmation setup is more safe. So you would have to ride this out because you almost would have gotten stopped out. This is why you keep your stop loss one thing below the signal bar. You actually have a new low first entry short, second entry short failure as well, but the signal bar is bearish doji, not the best bar. But if you enter here, additional, another confirmation, another bearish trap, because EMA keeps holding every time. And once you see this high low, okay, this is obvious. The channel is wider. This is not overshoot. Strong bullish momentum, and prices keep continue working hard. At this point though, you will be buying too high, but notice we have all high probability setups in a row. Exactly what you're looking for. So actually at this failed second entry short, you know, not a bad setup because signal bar matters less on failures. But you know, definitely more aggressive with this signal bar. But you have a two-legged pullback second entry long, high-low confirmation setup, failed second entry short, and ultimate high-low confirming even the failed second entry short. So this is our goal we're trying to achieve. We want to buy low where the correction phase will end at the key entry point and where the push phase will begin. This is all we're doing as price action traders, trying to find these places when the correction phase will end and a brand new push phase will begin. Okay, I'm going to redraw the downtrend, something like this. Okay, I have flat EMA, can't take anything, we're below EMA. At this point, we're going way too sideways, EMA exactly under these bars. I can't take anything. Okay, we're confirming the trend line, but you know, too sideways. I would need to see some confirmation because this trend line is getting confirmed, yes, but the confirmation would be better. And now we have high-low confirmation setup. The fact that you're pushing above EMA and confirming the trend line and sort of like a visual two-legged pullback like this, this is a good setup. Actually, this is already way too late, so you don't want to really take it. But I'm going to mark it as an educational setup, but it's already too late. You don't want to be taking the setup and market keeps trending higher. Break and new extreme. Remember, just because you are a trader, that doesn't mean that you have to trade every single day and that you have to take setups all the time. This is a mess. So many congestions, flat EMA, so many no trade zones. So what you don't want to do, you don't want to be forcing a setup just because you're eager to take an entry. Wait for all the price action rules to align. Wait for context to get clear. If you didn't take anything throughout this, that's okay, because eventually the uptrend was established. You want to try to mark the important key levels once you're trading in training range, but there were no static highs, so you can't really sell any good setup safely. I hope you had a great trading day and good luck with your trading.